the most exciting company in the gold space. I'm Paul Harris for Kitco Mining at the 2024 Gold Forum Americas event in Colorado Springs. Joining me today to show me why it's exciting is Louis-Pierre Gignac, founder, president, and CEO of GMIN Ventures. Louis-Pierre, welcome to Kitco.
Thanks for having me.
Now, GMIN Ventures, as I said, is becoming one of the most exciting growth stocks in the gold space. You've recently built the Tocantinzinho gold mine in Pará in Brazil. You recently declared commercial production there. You bought Reunion Gold for the OKO West project in Guyana. You just released a PEA on that. And you are buying the Centro Gold project in Maranhão in Brazil from BHP for just a royalty. It's been a whirlwind 12 months for the company. What is motivating this growth spurt?
Well, that was always what we set out to do from the start, to be honest. I mean, we wanted to create an intermediate gold producer, not just be a single asset producer. So growing the business was always part of the plan. Obviously, we wanted to deliver on Tocantinzinho, which we've done. It took 22 months to build. We built it on time and on budget. And at that point, we saw the opportunity to transact with Reunion to gain access to the OKO West project. So given our experience in the Guyana Shield, seeing OKO West, we viewed it as one of the best projects that we've seen in the Guyana Shield. And with our skill set, we felt that we were the best positioned to create the most value with that asset as well.
Well, let's talk a little bit about that skill set. GMIN, the background of the company is building mines. Notable builds recently include the Fruta del Norte mine for Lundin Gold a few years back. More recently, the Greenstone mine for Equinox Gold. Has it been easy to sort of leverage that skill set into the skill set of running and developing a junior gold company?
Yeah, it has, obviously. I mean, even though we build projects and that's what we're known for, we're always working on optimization studies, and most of our people come from operating backgrounds as well. So those are all skill sets that we have in-house, and we're now leveraging to operate the assets now that we've constructed. So that's definitely an advantage that transitions well into operating these mines once we've built them. So,
as a mine builder, do you take a different view on projects when you look at them than, say, the investors that are here at this event?
Yeah, well, definitely we're going to have a lens of looking at things from a realistic point of view. The PA that we put out on OKO West is one that I would qualify as an advanced PA, if not almost a PFS to some extent. And that's due to the fact that we've built projects, we know what it costs to build things. So I think we do have a very different lens when it comes to understand what it costs to build and also operate these assets.
I imagine you do those studies with a view to actually having a buildable project.
Correct.
Rather than perhaps maximizing NPV or maximizing the annual production run rate.
Yeah, well, definitely in the case of OKO, I mean, we've designed it to maximize value. So that meant, what is the proper milling rate? What are the mining rates that we want to have from the open pit and the underground? Because we do have both in this project. So there's lots of optimizations that were done to find that sweet spot. But definitely it was one about maximizing value, but also making sure the project was going to be executable. And by that, I mean, we've phased the underground to be once we're up in commercial production, so doing our development during the first 2 years as opposed to trying to do everything up front as part of the initial project. So that was kind of the lens we took.
Okay, we're at an investment conference. What kind of meetings are you having? What's been the response from the investors to your growth this year?
Yeah, we've had very good meetings. I think everyone's very happy that we continue to deliver to expectations. So it's always very good meetings that we've been having with existing shareholders, now essentially new shareholders that have come from the Reunion side. So that's what this conference has been allowing us to do, is meet some of those new shareholders. And I would say now there's also a mix of corporates, showing interest in what we're doing and recognizing that we've progressed quite a bit in the last 4 years since we created the company. So there's obviously some interest to know how we want to continue growing the company. And
you're smiling. It looks like there's something you want to say, but you can't.
No, but definitely, I think everyone out here is looking to grow their businesses, and whether that's through internal growth, exploration, or M&A, those are all the levers that everyone's pulling at any given time. So,
let's look forward a bit. What's the ultimate goal, or where do you want the company to be in 5 years?
Well, initially we had said, we had raised the bar to 500,000 ounces of production as a next step up to kind of graduate to the intermediate producer status. So the combination of TZ and OKO allows us to do that. So from there, obviously we still have to deliver on the project. There's still lots of work to be done. But from that point on, then we start looking at, how do we get to 1 million? And it's always to grow in relevance in the market and in the investment community to really get to that production level is an accomplishment. So that'll be kind of the next objective once.
Now, you said you'll be moving ahead to start building OKO West next year. But I have to say, you're one of the most talked about companies in terms of the rumour mill. And one of the big ones there is, whether indeed it will be you that builds that mine and your immediate neighbour, G2 Goldfields. What's the situation between OKO West and G2 Goldfields? And where do you see that developing, or how do you see that evolving?
Yeah. I can kind of speak from how I see things. OKO West is a sizable project. We have 4.5 million ounces of production in our PEA. So it's a meaningful scale that, stands alone on itself very well, generates great returns. So we don't really necessarily need additional sources of mill feed to make this project work. And we have the capacity to build it and to finance it. So if there's a better solution out there of combining things, or that's to be explored. But I would say yes, and call it at a very high level. It doesn't make sense to invest in infrastructure at two sites that are so close together. So there's probably a more optimal long-term solution. But in the near term, we're happy to continue advancing our project, and we're ready to start essentially next year. Given that we'll be submitting our ESIA by the end of the year, permits will come likely within 6 months. And given the government of Guyana's interest to see development, they're wanting to facilitate us to start even before mid-year next year. So that's the plan.
You've had a successful 12 months. You've had share price appreciation. People have seen that you can execute. There are many development stage projects out there in the hands of undercapitalized juniors. Given all you've achieved in the past 12 months, does that give you, let's say, extra, good currency to perhaps transact with other companies, other deposits in other jurisdictions, and build them?
Yeah. To be honest, if I look at my valuation now, I would say we're undervalued in terms of a PNAV multiple. I don't consider my share price to be one where I can use it at this point to go and buy other things of substantial, value, if you wish. But I think on advancing OKO and like we did with TZ of executing properly and on time and on budget, we'll re-rate that valuation, and then we can pursue other M&A opportunities or growth from that point on.
Do you, as you mentioned, you'll be heading towards a 500,000 ounce a year run rate, and then potentially beyond that towards 1 million. Do you feel vulnerable to an aggressive or hostile advance to acquire the company?
We have some more knocks on the door that are more on the friendly side, of just companies wanting to see if there's interest on our side of combining or wanting joint venture partners. So different options that we could potentially consider. But we haven't seen like a hostile type of, takeover interest that I'm aware of at this point. So.
Okay. Now, there are development projects out there. What's the What would you say is the sweet spot for you? What type of project, what type of deposit, what's your sweet spot?
Look, we've done various types of process plants. Me personally, I do have a preference for at least having an open pit component to a project. They're always much easier to start up and commission and are a little more forgiving. So that's kind of my preference in terms of the type of projects we look at. Also, I do find they're a lot more scalable. You can often get, higher gold production profiles unless you have very sizable underground mine potential. But those are typically the ones that I'm most interested in. But yeah, for us, it's also more jurisdiction and timeline to be able to execute. So if we're stuck in a 5-year plus permitting horizon, it's hard to create value during that period. So that's where we try and stay away from situations where we can handcuff ourselves for the next 5 years trying to unlock permits and whatnot.
Now we're in a high price, gold price environment. A lot of people think the gold price is going to move higher. Inflationary aspects are starting to come off as the oil price starts moderating. Your capital allocation priorities, I imagine, are reinvesting in the business, next growing, developing OKO West. But beyond that, how do you see you developing the sort of capital allocation strategy for the company? Will it be continually to reinvest in the business, acquiring new assets, developing them, or at some point will that incorporate other things?
Yeah, no, I see it incorporating other things once we get OKO West up and running, and with that cash flow, there's an ability to start sending some back to shareholders and still have the capacity to grow from that point on. So that will become a factor once we get OKO across the line, if you wish. So.
Okay, GMIN Ventures, obviously the publicly traded company,
Yeah.
but you've also got GMIN Services, which is a mine building company. Are there direct links between the two, or are they completely separated?
Yeah, they're completely separate. So we have a master services agreement with GMIN Services when they perform engineering work for us, or if they do, construction activity, then we normally transfer one of their teams over to us for the duration of the project. So it makes it very clean and transparent. And from a governance perspective, even though we have equity ownerships in both businesses, everything we do with GMIN Services is communicated to our board, and there's full transparency in that respect as well.
Okay. How do you think the rest of the year is going to play out in the gold space?
Yeah, look, we keep hitting all-time highs. There's been 12 this year, I think. So I think that's kind of the exciting part now is just to be starting a mine and reaching commercial production and at these gold prices is something we hadn't planned for. So that's a good surprise. But yeah, I think there's a lot more interest in the gold space. And hopefully we can see that in share price appreciation with new investors coming in and more retail investors as well. So.
Well, people say timing is everything in investment, and you certainly seem to be becoming the gold company at the right time.
Absolutely. We couldn't have timed it better, to be honest.
Excellent. Well, Louis-Pierre Gignac, thank you very much for joining us today.
Thanks a lot for having me.
We have a lot more to come from the 2024 Gold Forum Americas in Colorado Springs, so hit that subscribe button to see all of our videos. I'm Paul Harris, and this is Kitco Mining.